Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in India, because the Indian rupee is continuing to fall in value, and at the end of January, it fell to another all-time low against the US dollar. And before you say, well, the US dollar is doing really well, so this isn't really a major problem, the Indian rupee has actually performed the worst out of all of the Asian currencies against the dollar in January. This chart shows the percentage movement in January for the 7 major Asian currencies, and here's a little test for you. See if you can name what all of these currencies are. And the scale on the left hand side of this chart goes from plus 2% at the top to minus 1% at the bottom. So if we start off on the left hand side, the Indian rupee fell by 1.1% against the dollar in January, and as you can see, that is the worst performance out of all of these 7 currencies. The second worst performing currency, with the abbreviation IDR, was the Indonesian Rupiah. The third worst performer, with the abbreviation PHP, was the Philippine peso. The Chinese yuan came in at number 4, and interestingly, it increased in value against the US dollar in January. The Malaysian ringgit was the third best performer, the second best was the Thai baht, and the best performing currency in January against the US dollar in Asia was the South Korean won. So as you can see from this chart, the poor performance of the Indian rupee in January wasn't actually down to the strength of the US dollar, because 4 out of the 7 currencies shown here actually appreciated in value. And if we look at this chart, which shows the exchange rate between the US dollar and the Indian rupee over the last 12 months, you can see that the rupee has been in constant decline over the last year. And if you look at the right-hand side of the chart, you can see that the decline has actually accelerated over the past couple of months. There is a sharp upturn in the angle of this chart. And if we expand the scale of this chart to show what's been happening over the past 5 years, you can see that the rupee has been in decline against the US dollar since the start of 2021. And the main cause of concern at the moment is that the current rate of decline in the value is one of the most rapid that's been seen at any time in the last 5 years. Now, before we go on any further today, I want to thank NordVPN, who sponsored today's video and who are offering Joe Blogs viewers 4 months extra on a 2-year plan that you can access by clicking in the link below. Now, if you follow the channel, you'll know that I've personally been a victim of cybercrime. This channel has been hacked twice. And on both of those occasions, I was sent some form of email with an attachment in it, and that attachment contained malware. And if I'd have been using NordVPN on both of those occasions, then it wouldn't have happened to me, because NordVPN contains a unique feature called Threat Protection Pro, which would have prevented me from being hit by that malware attack. So NordVPN is fantastic for protecting you and your passwords and your data and your information every single time you go online. But it's also great for opening up a world of entertainment, because you can access data and entertainment and information that is not available in your region, that you're geo-blocked from. It's really easy to change your location and be able to access a whole new world of entertainment and information. Now, as I mentioned, NordVPN is offering Joe Blogs viewers 4 months extra on a 2-year plan, which you can access by clicking in the link below or going to nordvpn.com/Joe Blogs. And the great news is that it offers a 30-day money-back guarantee. So if you're not happy, you can get your money back within the first 30 days. And the reason why the continued fall in the value of the rupee is a concern from India's perspective is that firstly, it's a net importer. So it's buying in more things than it's exporting. And the price of all of those things in relative terms goes up as the value of your currency goes down. And also the fall in the value of the rupee makes India less attractive to foreign investors. And in January, there has been a $9 billion outflow of funds from the stocks and bond markets in India, as foreign investors have been pulling out. This chart shows the movement in the Indian stock market Sensex index over the past 12 months. And what this shows is that between February and September 2024, the index was rising and hit an all-time high of just under 86,000 points in September. However, over the past 4 months, the index has been falling and is now down by around 10% against that September high. And if you've been following what's been happening with other stock markets around the world, you'll know that the last 4 months has been a boom period. So this isn't a global phenomenon. This is something that is specific to India. This chart shows India's GDP growth rate, which is recorded on a 12-month rolling basis and reported quarterly. over the past 3 years. And what this shows is that in 2023, India achieved a growth rate of 8.6%, which is obviously a fantastic outcome. However, over the past 3 quarters, there has been a continued reduction in that growth rate. In the first quarter of 24, the growth rate fell to 7.8%. It fell to 6.7% in the second quarter, and the most recent figures for the third quarter of 24 show that the 12-month GDP figure has fallen to 5.4%. And whilst that is still a high level, it's lower than the target level of between 6.5 and 6.8% set for India for the full year of 24. So that means that the final quarter of 2024 will need to produce a stellar outcome if India is going to come in at that level. And India has set a similar growth target for 2025, so things need to start improving if India is going to stay on track. Now, as I mentioned earlier in the video, one of the reasons why the value of the rupee is so important to the Indian economy is because India is a net importer. It pays more for all of its imports than it receives for the sale of all of its exports. This chart shows India's balance of trade, which measures the difference between the value of your imports and exports over the last 12 months. And the scale on the right-hand side of this chart is measured in billions of US dollars and goes from 0 at the top to minus 40 billion at the bottom. And what you can see from this chart is that in every single one of the last 12 months, India has recorded a negative balance of trade. So the cost of all of its imports is higher than the value of all of its exports. 12 months ago in January 24, India recorded a negative balance of trade of $17.5 billion. But as you can see, in the following 10 months, that negative position increased in virtually every single month. And by November, the deficit had increased to $37.8 billion. Now, the position has improved slightly in December. However, India still recorded a deficit of almost 22 billion US dollars in the month. And if we expand the scale of this chart to show the situation over the past 5 years, you can see that the balance of trade has been negative in every single month apart from one, and that was June 2020 during the COVID-19 pandemic when everything went into lockdown. And you can see from the shape of this chart that the size of the deficit has actually been increasing over the past 5 years. So this is putting more pressure onto the Indian economy. And the value of the rupee is really critical because if the value continues going down, it makes the cost of all of those imports in relative terms more expensive to all of the companies and people in India. And this chart shows the movement in India's current account, which is similar to your checking account in terms of telling us whether India is drawing down on its cash reserves or building up cash over the past 3 years. And the scale on the right-hand side of this chart is also measured in billions of US dollars and goes from 7.5 billion positive at the top to negative 35 billion at the bottom. And what you can see from this chart is there has only been 2 quarters out of the past 3 years where India has recorded a positive current account balance. In every other quarter, it's recorded a deficit. And that means that India has constantly been drawing down on its reserves. And this is a major problem, particularly when the value of the rupee continues to fall, because the Central Bank of India is using some of its reserves to support the value of the rupee to stop it falling below a certain level. And so it's putting further pressure onto the central bank and its reserves. This chart shows the movement in the official rate of inflation in India over the past 12 months. And one thing to note about this chart is that the scale on the right-hand side does not start at 0, it actually starts at 3.4% and goes up to 7%. And what you can see here is that between December 23 and August 24, inflation was on a downward trend. And in July and August, when the rate came down to 3.6%, it was actually within the target rate of 4% set by the Bank of India. However, over the past 4 months, we have seen an increase in inflation. And this ties into the fall in the value of the stock market and also the fall in the value of the rupee, which has been accelerating recently. And the most recently published figures for December show that inflation is currently running at 5.22%, which is above that target level of 4% set by the Bank of India. And this chart shows the movement in food inflation, which is a metric that we always like to look at on the channel because it's really important to the poorest members of society what's happening with food prices. And once again here, the scale on the right-hand side does not start at 0. It starts at 4% and goes up to 12%. And what this chart shows is that food prices have been increasing at a more rapid rate than general prices in India over the past 12 months. And in October 24, they hit a 12-month high of just under 11%. And the most recent figures for December 24 show that year-on-year food prices increased by 8.4%, which is considerably higher than the general level of inflation. And that's obviously a concern for everybody, but particularly the people with low incomes in India. So what's the summary and conclusion today? Well, I wanted to post this video because India is the largest country in the world in terms of population, and it's the 5th largest economy in the world, so it's relevant to the global economy. And what we've seen from today's data is that there are real causes for concern in India right now. The value of the rupee has continued to fall over the last 12 months, and the rate of that fall is now accelerating. And the Bank of India is having to step in to support the value. And that's a problem from India's point of view because it's a net importer. It buys in more things than it exports. And so as the value of the rupee falls, it makes all of those things relatively more expensive for the people in India. And we've seen from the data that inflation is rising and food inflation is rising at a more aggressive level than general inflation. And that's obviously a concern for the poorest members of society. But what we've also seen in today's video is that the stock market over the past 4 months has gone into decline in India. And it's reported that over $9 billion worth of investment has been pulled out of the country since the start of 2025. And that's obviously a concern from the Indian authorities' point of view. And what we've seen is GDP is slowing down. It's still rising at a relatively rapid rate, but it's less than the target rate that's been set by the Indian authorities, both for 2024 and for 2025. And obviously, if that continues, it will mean that India will miss its targets in both of those years. And clearly that represents a serious issue for the Indian authorities. And one of the other things that they're now considering is that Donald Trump is talking about taxing everybody. He's going to apply tariffs on virtually everything that's being imported into the USA. And from India's point of view, that could represent further problems in terms of the revenue that they're receiving. It could mean that the balance of trade goes further into negative and puts even further pressure onto the economy and the rupee. And this could really become a vicious circle quite quickly. So the overall summary of today's video is that the value of the rupee is continuing to fall. That's coming at a time when GDP is slowing down. The impact of that is meaning that the stock market in India is now in decline. Lots of foreign investors are pulling out of the country. They're removing some of their investment. And all of this represents serious problems for the Indian authorities that they need to address soon. Otherwise, GDP will come short of the targets that have been set. And inflation will continue to rise. That will put pressure onto interest rates. And all of this can very quickly become a really vicious circle from India's perspective. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.